Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Thursday, January 19th, 2017. Well, folks, the spiders, the S&P 500 essentially is down on the day, although we are off of the lows. Here's your intraday 10-minute chart on the SPY, and this is your day break. So this is where we started today right here. You can see first candle of the day was a little topping tail. So we always talk about, does the market tell us exactly what the next move is going to be? And I'm a believer it does. Now, in my opinion, if I don't see it, if I don't know the next move, it's because I missed it. It's not because it didn't tell us. There's always something there that's telling us. It's just we have to interpret it. Essentially, think about it like a foreign language book. And you open that book, and it's clearly written what it is. It's just in a different language. You need to decipher it. You need to know what it is. So, in any case, the spiders today opened up with a topping tail, and that was a precursor to basically a sell all day long. You can see we came down, we had a small bounce, and then we just continued to fade, culminating in kind of this early afternoon sell-off right here before a late kind of bounce into the end of the day. Now, the important of factors that we're looking at here and that I'm watching very closely on the spiders, if you go to your daily chart, notice how over the last 2 weeks or so, we've been hammering on the 20. All right, so really starting right here. You've been on the 20 and you closed above it, you hit it, you bounced up, you kissed it, you bounced up, you didn't quite get there, you hit it again, you bounced up, you pierced it each time closing above, stayed above, and then we started to test it here again. Notice how today when we were at the lows, we were below it, but now they're rallying this market back up. And right now, if it were to close, it's right on the line. Any sort of uptick here into the end of the day, it'll close above. And the reason why I'm pointing this out and it's so important is because it appears to me that that's the break point. So if you can close back below that low, to me it signals downside on the markets. If you can close below that trend line, that 20 moving average, this yellow line here. As long as they keep it on or above, I think you got to give the benefit of the doubt to the upside, meaning that you got to say to yourself, most likely the markets are going to continue to rally over the next couple of weeks and so forth. Okay? So that's why I'm focusing on that so intricately. Now, if we do break to the downside, all right, where are we going to go? Answer's pretty simple here. You have the 50 moving average here, this little purple trend line. Okay, 50 moving average, purple trend line. And then also what's so cool about it is you have this trend line, pivot top, connected trend line right to here. You get this low, and you also get the 50 moving average. So all in all, this to me looks like this is the target. That's only if you get a close today below the 20 moving average. And really, in all fairness, it's not that big of a downside move. It's only like 2 to 3 points to the downside before you hit next major support. And the 50 MA is going to be big support. There's no doubt about it. Okay? And I'm still, as far as I'm concerned, I'm still in the camp that at some point in the next month or so, we will get above 20,000 on the Dow Jones Industrial Average. Okay? A couple things to go over. Netflix today. Take a look at Netflix. And you can see we broke above a little bit of a trend line on the gap, but notice how it's a weak move. You're starting to fall. In fact, you're at the lows of the day. And what I was able to discover is if you take this little pivot high here and connect it through, look at that. So pivot high to here, and you get that. So that's exactly why. So you got above this one, but this one became inconsequential. What you did was you went right into this, and then you started to fade. So again, I would say that this was an 8% move after hours yesterday on earnings on Netflix. It's only about a 4% move now. It's not exactly robust. The fact that you're continuing to kind of make new lows of the day is not a good sign for Netflix. The one thing in the numbers with Netflix is that their cash burn rate is huge right now. They're going to have to do a capital raise, and I think smart money, in my opinion, today was selling the gap up because they understand that a capital raise is going to be dilutive to shareholders, and that's going to come. I don't know when it's going to come, but Netflix does need to raise some cash. Okay? All right, so I thought that was very interesting. Netflix overall did help tech hold up pretty well early in the day, but obviously as it fades, it's hurting it a little bit. Today we get earnings from IBM. IBM, very tough chart to read here. Very, very tough chart. You got just choppy consolidation. You're just off of 52-week highs. If I zoom out here, you can see, again, you're hovering up. I don't have any good read on this, so I'm not even going to pretend to give you a bias on it. We can erase this trend line. We don't need it. A couple things. If we started to dump, if we had a big dump, you have a Very important trend line right here, but this would be a big sell-off. I don't expect it to get here, but 152.5 would be major support, and plus the moving averages. I mean, you got 200 at 157 and the 50 moving average around 164. But again, as I said, there's just as likelihood that it goes down as it could go up, just like Netflix. Upside, in fact, I do favor a move to the upside at some point in the next couple months. I don't know if it'll be on earnings, but if it is, then that makes sense. There's a gap here. See this? I know it's really hard to see, guys. I don't know if you can see if I zoom in a little bit. See how you have this pivot up here and then it gapped lower to here? All right, this is going back to 2015, like September or so, or even August. But this gap fill to me at approximately 173, that needs to be filled. And maybe we can fill it. Now, if we fill it, I actually think the stock becomes a short. Now, if we fill it on earnings, you're going to hear a lot of upgrades and bullish chatter. But for me, I'm going to take it as a negative. And I think that's a shorting level, just like Netflix. Remember Netflix I just showed you? It gapped up into here. Now, everyone was so bullish. If you listen to CNBC this morning, it was just like, oh, this was the best ever. I mean, look at Netflix go. And then what does it do all day? Look at it fade. Just continue to fade right off of this trend line, pivot high to pivot high. So to me, it might be an intriguing short if we can get a gap up into this 173 level. And I might be taking that position. So again, if you're in the research center, you'll know because I'll put it out if I take the trade. Just be ready for it. Okay, and again, there's no guarantees. I have to do some number crunching, but I would say there's more than a 50% chance if we were to get up a move on earnings into 173 that I would take that trade. All right, have a great afternoon, great evening, guys. As always, come join us at InTheMoneyStocks.com. It's a pleasure. Take the 7-day free trial to the research center. Get my live trades as I take them. And again, profit with me, profit with my business partner. Make money like we make our members every single year. Take care.